my disposal different jumbo loan products that will allow you to put 10% down and automatically the private mortgage insurance goes away. So that's a pretty big perk of being at those higher price points. Hey, how's it going? Thank you for joining me on this week's episode of The Real Deal. This week, we're going to be going over monthly payments and how I come up with these monthly payments that you've been seeing on my pick of the days. I want to make sure that you understand that these monthly payments are absolutely achievable without having to put 20% down. Whenever I do it on my story, I'll add a screenshot of the pick of the day or the payment breakdown. And then on my actual post, it'll be just written out. One of the biggest questions that I get is, hey, how are you able to display no private mortgage insurance, but I noticed that your down payment is only 3% or 10%. So I'll go ahead and explain that to you. Let's start off with a lower price point. So anything in the $650,000 or below price point, this is all going to be traditional financing, conventional, conforming loan limits. Basically, this is just the most common type of loan with more lenient qualifications as opposed to a jumbo loan, right? So with anything under 650, if you're a first-time home buyer, you can purchase with just 3% down, which is phenomenal. To be able to buy a house, to be able to buy a $600,000 house by putting 3% down, that is your down payment. Now, the way that we're able to get around not having private mortgage insurance is you can actually prepay your private mortgage insurance up front, so that way it reduces your monthly payment. And that's something that a lot of people don't know. They think that you had to put 20% down to do that. That's not the case. So you can purchase a house with 3% down, prepay your mortgage insurance. Now, how much it's going to be to prepay your mortgage insurance is based on a lot of different variables. It could be obviously the purchase price of the house. That's going to be one of those. Your credit score, that's going to be another one. Sometimes your debt to income. So the lenders, they plug all this information into their system, and it gives them the amount that it would cost to prepay your mortgage insurance. Now, the higher the risk factor, the larger the amount. The lower the risk factor, obviously the lower the amount. So that's really going to depend every case. It's a case by case basis. It'd be really hard for me to give you an idea, because every single little detail will kind of change that dollar amount. I've seen them as low as like $5,000 to prepay your private mortgage insurance, and sometimes I've seen them as high as $15,000, where it just doesn't make sense to do that. It makes more sense to just carry the private mortgage insurance on your monthly payment. So that's how you can get away with buying a house in that $600,000 price point and having those monthly payments that you're seeing there. Now, this wouldn't work for FHA financing. FHA, you can't prepay your mortgage insurance. You have to carry that on for the life of the loan until you can refinance out of it. So if you have really, really good credit, like 700 plus, 720, 740, this is going to be the best suited for you, because it's going to cost you the least amount of money to prepay your private mortgage insurance. Now, when we're looking at higher price points, it's actually a little bit easier. So believe it or not, with jumbo loans, which is one of the, so whenever I post anything above $650,000, when I'm posting something, in the $850,000 price range, then you're seeing 10% as opposed to 3%. And the reason why is I have at my disposal different jumbo loan products that will allow you to put 10% down and automatically the private mortgage insurance goes away. So that's a pretty big perk of being at those higher price points, is that as long as you have a decent credit score, once again, you want to be at like a 720, 700 above, because now we're jumping into jumbo loan territory. Remember, anything under 650,000, that's conforming loan limits, regular conventional. Anything above 650,000, this is considered a jumbo loan. And so some of these products, I mean, they come out and they come and they go, but this one's been sticking around for some time. It's a really good one. If you're looking at those higher price points, if you're selling a house and you're looking to upgrade and you're wanting to keep as much money as possible to reinvest or just to keep in your savings, you can purchase at a jumbo loan price point, 650 or above, with 10% down, and the private mortgage insurance at that point does not have to be prepaid. You basically this is a specialty product. You just don't have that private mortgage insurance. So hopefully that helps you understand where I'm getting these monthly payments from and how achievable they are, especially at those higher price points. Typically, traditionally, when you're shopping for a jumbo loan, it's almost guaranteed that you have to put 20% down, but that's not the case. I have investors that can do it with as little as 10% down. And then obviously that's going to make a huge impact on your monthly savings. And as you can tell, I mean, there's a lot of different scenarios. There's a lot of different ways to approach the situation. Every case is going to be different. I'm obviously going to show my clients best case scenario every time to show them, hey, this is potentially where you can be at if you work on your credit and if you have some extra funds to prepay your mortgage insurance. So hopefully this helps give you a good idea of where to start. If you have any questions, any concerns, reach out to me. If you're a buyer and you want to talk about some of these down payment programs, or you want to talk about your affordability, reach out to me. If you're a seller and you want to talk about how you can sell your house and upgrade into another one and keep in as much money as possible in your bank account, we'll definitely have that conversation. All right. Thank you much. Take care and have a good one.